good time to then have a conversation with one of the biggest BFSI companies of the country. Shriram Finance is on our radar. How is this year shaping up for the company as those rate cuts percolate through the system? Well, let's discuss that and more with Mr. Umesh Revankar, Executive Vice Chairman at Shriram Finance. Mr. Revankar, good morning, sir. Great to have you on. Every time we speak to stock market experts, they tell us the one sector to focus on is BFSI because that's where things are lining up quite well. Now, you tell us, translate that in terms of numbers and what you're seeing on ground and how you're expecting the rate transmission cycle to impact you. The cuts that have happened, the CRR cuts that will come through soon enough. You've guided for, I think, about 15% growth, AUM growth for this year. Will it be more back-ended, front-ended? Which are the segments where you're seeing good, demand pick up? Just give us a broad sense of how the monetary transmission will play out and what it will mean for Shriram.
Yeah, good morning. I think it will take a while because normally June, July are not the peak of the state. August 15th onwards or after, typically things move up on the other demands. Even the inflation goes down during this time because of heavy rains and we little.
Oh, I think we'll have to reconnect that line. Maybe it's all the rains, the heavy rains that he was talking about. Those heavy rains have been lashing Mumbai as well. Maybe that's kind of playing up with the telecom lines. We'll try and get him back very, very quickly. I'm just going to quickly recap what we know from Shriram Finance so far, what they've guided for. Their guidance is that loan growth in the current year, FY26, is going to be around 15%. They're expecting CV to grow between 12 to 15%. PV growth, they're actually expecting it to be stronger, 20%. And some of the other segments like MSMEs should fire up for them at a good rate as well. About 20% is the MSME growth. And the NIM guidance so far that we have from the company is between 8.5 to 8.6%. And that's what we were trying to understand, that's the overall guidance for the year. But what happens, as we go through the 4 quarters? Remember, there are giants like SBI that have said that it's going to be a U-shaped recovery for NIMs. Initially, there'll be a sharp drop in NIMs as the rate cuts are passed on. But then at least SBI is expecting a good recovery because the CRR cuts will kick in. They'll cushion the impact on the net interest margin side. So, that's one segment. The other segment, obviously, is gold loans, which is where a lot of NBFCs, including Shriram, of course, are getting active. So, but you were explaining how this is a bit of a lull period because of the monsoon. So just tell us, in terms of a pickup in loan growth and also on margins, how will this monetary transmission play out?
I think it will take a time because what happens in the capital market is yet to respond to that. Even though banks have passed on some rates, typically NBFC have around 20-30% of the borrowing from the bank and rest of it from the capital market. And it is not an entire liability get transmitted that rate reduction. I think it will take a while, and maybe over the 6 months, the rate reduction will get transmitted to the NBFC liability, and some of it will definitely pass it on to the customer. So customer demand to revive and the overall credit to go up, I think it will be during the peak season, that is October, November onwards. So the second half should be much better for growth.
Revankar, good morning, Prashant here. We were just having a chat with a banking analyst earlier today, and we were saying around 12% is where they're at. We're at under 10% now, so it's sharply lower compared to the same time last year. Expectations are that things will pick up north of 12?
Yes, I think the demand should definitely pick up. That's what I was suggesting, that second half should be the time where the demand should be picking up. Because of good monsoon, even the rural demand will keep going up. And the infra demand will pick up significantly is what I strongly believe.
And you were referring to rains earlier, Mr. Revankar. I think and that is important, right? Overall, always important that we get good monsoon rains, and the forecasts are that's going to be above normal.
Now, 2 consecutive good monsoon and above normal is definitely very good for the rural. And MSP price also are increased for 2 consecutive years. And that will augur well for rural consumption and rural demand.
Just one more question. Underlying demand, and it'll pick up. There are lots of variables. But two conversations we've had recently. One with Chola, they gave us a pretty sober assessment of what's happening on the commercial vehicle side. The second is we spoke with CEAT yesterday, and again they were kind of sort of across the board. They were saying replacement is okay, but otherwise, new demand is pretty lackluster, pretty soft. So just wanted to you to respond to that.
Yes, and basically what's happening is because of the price increase in the vehicles, almost all vehicles, price increase has been around 30%. So when price goes up steeply, the replacement cycle will become slower. So average holding of a vehicle today has gone up to around 9 years against around 7 years. That means people are holding on to the vehicle longer than in the past because of the steep increase in the prices. So people have to come to that comfort of buying a newer vehicle, and that cycle will restart is what I believe strongly, because world over the average age of the vehicle comes down to around 7 as the economy picks up. So I feel the CV cycle is still on the way up. It is not reached the peak. So maybe another 2 years of good CV cycle should continue is what I strongly believe.
All right. Hi, Mr. Revankar. Quick couple of questions before we let you go. The last quarter, you reported a technical write-off. Any such surprises we should expect in this quarter? That's quarter 1 FY26, if you could give us a hint. And also, from the write-off that you've taken in the past quarter, any kind of recoveries should be reflected?
Recovery, yes. See, it is basically the accounting change. We decided to have a write-off of the accounts which are at more than 12 EMI outstanding. So it's a one-off, and it will not be, once the policy is set in, it will continue to remain. So there will not be further, surprises on that. But yes, the recovery we can see over the period. Some recovery will be reflected in our results every quarter.
Okay, all right. You want to quantify it, sir? Quantify the recovery?
Quantify is difficult to make because, especially in the first 2 quarters.
All right.
Third and fourth quarter, definitely there will be.
Very quickly, before we let you go, the smaller part of your business is gold loans, and that's degrown actually in the past year or so. Now, the RBI has given a bit of a booster shot, peppered the segment on the whole. Any plans on increasing contribution from the gold loan segment, or you would like it to be a smaller part of your business itself?
Now, gold loan definitely will go up in our overall share of the asset side because we are focusing on that. And not only that, there is a lot of loans which are hitherto was going to the unorganized sector or pawnbrokers segment. That will come back to formal sector. So overall, all the NBFC and banks will benefit out of this.
All right, Mr. Revankar, thank you very much for joining us. Good speaking with you. Appreciate it very much here on CNBC TV18. Let's shift.